Investors and traders, welcome to the channel Market Chart Pattern. Today is 7th of July 2024. I hope everyone is having a great weekend. In this video segment, we will be taking a look at the key US stock indices and key markets such as the interest rate markets. We'll also cover the dollar index and then a brief look at the gold and silver markets because they are doing something important, all related to the interest rate markets and dollar, and then we'll deep dive into the US stock indices. As always, this video is for educational purposes only and it is not a financial advice. Okay, so the chart that we are looking at is the daily chart of the US Treasury 2-year Treasury note, and we have got the yields on the y-axis. So I'm not going to go into too much detail of this because we'll discuss this in its own section, but I really want to point out this is really key. What is happening in the interest rate markets, what happened last Friday, and the reason is that it finally broke on the shorter end of the curve, the 4.7%. That had been a support level for quite some time and finally broke to the downside, and we'll discuss further what it really means. Okay, now moving on to our timing model. So this is the Dow Jones Industrial Cash daily chart, and what the lines that you see, this is our timing model that we have been following. Longer term subscribers will know that this model has a pretty good record of picking key turning points. In fact, it has got an uncanny capability if you do the back test just by yourself by looking at some of these lines here. I'm not going to go into the details of how it is constructed because I've done a full video about this when we first started using this model a few months ago. So you can actually find that in the archives on the YouTube channel. And here what I want to point out is we had a key timing come in on the 1st of July. In fact, we had been waiting for this one for quite some time, and here what we have seen is the timing come in and the markets are actually pretty strong. So that's a good thing. It means that there is a bigger cycle perhaps which is holding up the markets and maybe perhaps also likely to push the markets higher. So this is the significance of this one. So further on for the next week, I'll do further work and we will try to uncover some other smaller cycles which are operating here. But this 1st of July actually is really important, and also what we have seen is the Dow Jones never really break the 78.6% retracement support line, and now it is just in a trading range here but higher and supported by the 20 period moving average. So more on to for this one a little bit later on. Here, something I just want to point out before we move on is this. This is the model that we were looking at in terms of our macro for the summer of 2024. It is also an election year, and here we were looking for the dollar to move lower, yields lower, metals neutral to higher. So these are mainly precious metals that I'm looking at, such as gold and silver. We were neutral because gold had already moved quite a bit, silver had also moved quite a bit. The dollar was a little bit firm, but now the chances are dollar is likely to move lower, so we could actually move from neutral to higher pretty quickly in this one. Risky assets such as stocks higher, and we have seen higher markets. We have seen markets actually being pretty firm, and also commodities. These are such as softs and grains, coffee, soybean, soy meal, that sort of things. We are neutral to higher for this one just because at the back of the weaker dollar, but we have seen actually lower commodity prices thus far, but a weaker dollar could actually help that situation. Now the other thing which I want to also point out is this one. So this is the chart which I present every week. These are the weekly ranges and the daily ranges for next Monday, and these are the weekly. Right at the top is the weekly ranges. This is the range we expect the key US stock indices to move in. So namely the S&P 500 E-mini futures, the NASDAQ 100 E-mini futures, and if you go and take a look at these numbers, the ES, for example, it actually came pretty close or might have actually hit the exact number. And what the NASDAQ did was it went and crossed the +1 standard deviation to the upside, and it finally settled cycle between the +1 and +2 standard deviation. So please pay attention to these levels. These are key levels, and I will actually give the levels for the next week as well when we get to the section for this, and I will also put those key levels in the description. I do apologize, the format might not be great for it. I'm trying to work on a solution for that, but here, please do pay attention to these levels. All right, so now what we're going to do is we will start by taking a look at the interest rate markets, and we'll start by taking a shorter look at the shorter end of the curve. So this is the Treasury 2-year note. So as mentioned at the beginning of this video, a really key thing, a really key market to actually be paying a really close attention to, because what we have seen is last Friday there was some economic news out, such as a non-farm payroll, and the unemployment rate actually went up a little bit, and we have seen the yields move lower. And this 4.7, that was the 38.2% retracement and structural support coming in from this point B of this black ABCD, this smaller black ABCD cycle here. And we have seen actually the market close lower. Ideally, we would like to see a second daily close lower that would actually confirm this. But why is this important? Because we had actually been looking at this market, and our analysis was that this market was actually putting in a head and shoulders pattern. So this is your left shoulder, this is your head, and this is your right shoulder, and there is pretty good symmetry between these two. So when I look at the head and shoulder patterns, I always try to look at the time symmetry between the shoulders and the head, for the right shoulder and the left shoulder. And if the symmetry isn't there, then from my perspective, that is not a head and shoulder pattern. But this one has a pretty good symmetry between these. So this is why I've labeled these as a head and shoulder pattern. And then we were waiting for further confirmation, because I believe that we are in this ABCD cycle, which could see the price, the yield move as low as 3.9% for the 2-year Treasury note. And the other reason is that we have seen this, the smaller ABCD pattern come right at the 78.6% retracement. The yields are not able to get above that. They tried for several days, a couple of weeks, and then a retest around here, and now breaking the key support level. So in my opinion, what we are looking at is also a possibility of another head and shoulder pattern here, smaller one, but I don't know what sort of symmetry exists between those. Let's do a quick one. Let's take this bigger one here, and if this is the left shoulder, and we bring it, yeah, there you go. With this breaking the support, which you can think of as the neckline, I think we have another head and shoulder pattern right here, which we can see happening around here. And then of course it is also looking like a rounding top here, just the way it was a rounding top around here. So there we go. This is what we are looking at, the shorter end of the curve. Now we are going to take a look at the 10-year Treasury notes. This is really big market. 10-year Treasury note is the several times the stock market, and it's really important as well, because this is the kind of the duration of the bonds which are used for marking loans such as credit card, etc., credit card rates, etc. So it's really important to take a look at this, and this is like much bigger than the Treasury bond market. And if you actually look at the intraday price action, if you happen to be a shorter-term trader, you'll know that this market actually moves pretty slow, just because it is such a huge market. You have got big institutions, you have got governments coming in and placing their orders in this. It's a huge market to move. And what we have seen is this market actually reject lower prices and close really positive for the end of the week. Now, here what we were looking for was basically it looks like we are in this back into this ABCD cycle or price projection, one-to-one price projection in red. I have not labeled this as such. We have this one-to-one price projection correction completing around 107.30. The market actually went a little bit lower, I think about a point, couple of points perhaps, which we actually covered more on the daily chart. And what we are looking at now is that, in my opinion, this market is supported, or the momentum is actually getting better because the price closed above the 20 period moving average. So the chances are we are actually in this only one price projection higher, which could see the yields move lower, the price move higher as high as 114.20 is the kind of level that we could be looking at. All right, now let's take a look at the 30-year Treasury note. So 30-year Treasury note, there we go. We had actually seen, not the last week, but the week before, a fair amount of selling pressure coming into this market. And on the daily chart, we were looking at whether it was just going to sustain or whether we're going to see follow through, i.e. more selling. And we did not see more selling. So actually, this week has negated the move of the last week has negated the move of previous week to the last week, which was the 24th of June week. And also you can see that it has this nice trend line. It is also supported. So support came in, and now this is something that we had been watching for quite some time on the daily chart in particular. This black one-to-one price projection ABCD is the kind of where the market could be actually heading to, and we of course have the 78.6% retracement coming around 128.18 from these highs around here. Now the thing is that the market could actually rally, the yields fall, but we will still be in a bear market. So we'll have to really see how the market is able to tackle this point, which is 139, roughly 140, because that is the 38.2% retracement from the highs reached during the COVID pandemic days to the recent lows, which came in around last October. So really important what is happening here. And also a part of this is also perhaps because of some commentary coming in from Chairman Powell, where he was on some news panel, and there were questions about what is likely to happen with the interest rates, when could be expected the first rate cut, and he made some dovish remarks. Maybe the core PCE level, the inflation level that they follow. He was talking about a range of 2.5% to 2%, and also he mentioned perhaps a couple of times the unemployment rate going up a little bit, but still being very, very low from a historical perspective. So I think Fed is really watching this kind of data, and if they see the unemployment rate actually moving higher, that could actually make them move with a rate cut, and which means that lower yields, higher bond prices, higher treasury prices, and that should also help risky assets such as stocks. So here we go. This is the daily chart, and here I'm not going to go into the details of it. This is where when we had that last Friday, 28th of June, a big massive drop, and we have seen this kind of drop before here a couple of days. So this is what we said, okay, let's see if we get a more follow through more than 2 days, so more than a couple of days, and we did not. So I think this move has actually been negated, and also coming in from support from this trend line. So that supports lower yields. Okay, now we move to the dollar index. Dollar index, you can see yields move lower, and the dollar index also moved lower. Now, one of the things that we have been talking about with dollar index is that we think that 107 level is a very strong resistance level. We have seen a top, double top, then a top, double top with respect to the tops on the left hand side, and then we see a top, a double top, a top, a double top. So several of these topping actions, and they are coming right at certain key levels. So here, when this market failed to go higher, but filled in this gap that we see, we became actually of an opinion that the dollar is likely to move lower. And this is what it has done thus far. But when it found a really good amount of support coming in from 7th of June, then it looked like, as well, show that to you on the weekly chart, that there perhaps could still be a possibility that the market could tackle the 107 level and go to maybe even 109 level. But now with this, I think if the market is bullish, or the dollar is gonna get stronger, then it really needs to get above 105.80 level, and the chances are that the dollar is actually the way it is moving, the way the yields moved last Friday, Dollar has been coming down for a few days. Looks like the dollar is likely to continue its downward journey and test these lows, and if it's able to take out these lows of 103.50 to the downside, then we are looking at an A, B, C, D, which will basically take it to the bottom of this range. Now, longer term, the view is, let me actually switch over to the weekly chart. Here we go. That it's really this 99 level around here which has been holding up, and the dollar being in this big trading range. If it breaks to the downside, then we are looking at an A, B, C, D, where the dollar could go much lower. And this is the point. This is the week of the 3rd of June, where the support came in, and the possibility of having this ABCD mentioned in red, where the market could go as high as 108.65 to maybe around 109.70. We had to just put it on the table as an alternative scenario. But now what we are seeing is, with the action of last Friday, last week, if we see follow through selling in this market, then most likely these lows will get challenged and perhaps broken to the downside, and we could see the market come in, challenge these lows of around 100, and move into this box that we have drawn for a long time. So this is what it looks like. The market wants to come and test the bottom of the range. And we are just waiting for further price action confirmation on the weekly charts around 103.50, but the chances are that it's actually finding great amount of resistance from 107 and moving lower. Okay, so now we'll take a look at the gold market. Here we go. This is the gold chart. This is COMEX gold. This is not spot gold. So if you're watching the price levels on the spot gold, the prices are not going to be the same. So just want to make that clear to you. On the weekly chart, we can see this market has been in a trading range for quite a few weeks, in fact, few months now. And it's just coming right at the 1.618 expansion of this big trading range activity that took place over the course of August of 2020 till October of 2022. And we also have the 1.272 extension, this blue cycle around here. So moving down to the daily chart, and we can see that gold looks bullish on the daily chart. In fact, very bullish. So what it's actually doing is it's found support around here, pretty much testing these lows of 7th of June. So bottom of the range, putting in a bottom, then testing the bottom against a double bottom, and now it's going and testing the highs. If it is able to get above this 2400 level on, then of course, in my opinion, it's gonna go and challenge these highs of 2450 and make new highs as well. Longer term, we have 2500 and then ultimately also 2700 as our target to the upside for gold. I'll show that to you on the weekly chart, on the monthly chart. Now, one of the things I wanted to point out is that initially I thought maybe I wanted to complete this correction around 2280 level, and now looks like the gold is much stronger, so it actually found support from the bottom of this 7th of June low. And moving on to the monthly chart, this is really longer term stuff. I've done actually a video about this longer term cycles which are operating here, so I'm not going to go into the details of that. You can watch the video. I'll try to put a link to it towards the end of this video. You can scroll towards the end and find that video. And here you can see that this purple cycle and the smaller brown cycle, they come around 2700, but I also believe that 2500 is going to be a psychological level, and the market will perhaps reach that and go sideways a little bit, but our cycles are actually pointing around 2700 for this market, which it could actually achieve, in my opinion. Now let's take a look at the silver market. This is the daily chart of COMEX silver. This is not spot silver, just like the gold. And here I just wanted to point out that you can see that this downward trend line, it was forming a pennant formation or a triangle. Price just moved out of it really quickly. Secondary confirmation, in my opinion, is moving in this ABCD. I've not labeled it, 1-to-1 price projection in this red, and we could see 35.30 also for this market. In fact, it could happen quite quickly because I think that the US dollar is going to move lower, and it could move lower quickly or aggressively. Perhaps we'll wait and see. Okay, so yeah, there's a 1.272 expansion of this entire range, and then above that, 38 is the 1.618 expansion of this. I've not drawn the ABCD, but I'll also get somewhere around here. So this 38 dollars per ounce level is going to be really key for this market. Okay, so we have covered gold, silver. Let's also take a real quick look at the Euro USD because that's going to be the opposite of what the dollar index is doing. And here we can see that this market is actually getting stronger. It had a pretty bullish week last week because the dollar had a bearish week. So yeah, looks like the next kind of challenge will be around 109.15 level, and then I've not drawn an ABCD, but it actually takes it to 110 level is most likely where this market would go and find some sort of resistance. So this is what is happening with euro, and we can also draw a trend line like this. And we can see that this market remains supported from this as well. We can also draw like a pennant formation, so ultimately it looks like it will have a breakout. Okay, so now let's move to the stock market. So I'm going to start with the NASDAQ 100. Here we go. So the NASDAQ 100 is really reaching the level that we had been discussing for a while, long time in fact. So the long-time subscribers of the channel will know that we actually came up with this target of 20,750 based on this 1.618 expansion of this BC swing, which is the entire 2022 bear market, and then of course the 1-to-1 price projection ABCD of the COVID lows to the highs of November of 2021, projected from the lows of 10th of October 2022 when this market actually finally took off and the bear market came to an end. And that projection gave us a figure of about 20,750, 20,700 roughly. They're about ballpark figures. And now that market is pretty much there. So it's really fascinating to see the high came in last week as high as 20,639. So in my opinion, the pattern is, complete. Now, what is really interesting is that what we're also seeing is with respect to the treasury yields moving lower and the dollar actually also moving lower, and this market is really strong. It has been very strong. It's been a leader for the US markets, the technology markets. It could be a handful of stocks, or it could be a number of these mega stocks that is pushing the market higher. But the reality is that it has actually achieved the level that we were watching for a few months now, for quite a few months, ever since we came up with these projections. I don't remember exactly, but it was a long time ago. So it's completing that pattern, and it'll be really interesting to see what the price action will look like. Now this market is a leader. The other markets are kind of, a little bit behind. Maybe they will have to play a catch up. So there's one chance that this market actually will remain very strong and move much higher. So here, let's also, but just keep in mind that, this is completing its ABCD pattern here. Now, if we take a look at the cash market of S&P 500, here we go. So this is what we see. It's also been pretty strong. There's a really long-term nice trend line which has supported this market. We have this 56.51 as its target, and the market is actually if I draw this ABCD just like for the NASDAQ 100 for futures market, it gives us a rough target of above 6,100. So I believe there's gonna be shorter term we should look at 56.50 as being achievable, and then maybe the market could actually shoot up to 66,000 as well. So some of these targets might really look whether the market will be able to achieve that or not, questionable, etc. But the reality is this market has been pretty strong, and when the market bottomed around here, there was a lot of pessimism. When the market began to fell from here, it did a correction, there was a lot of pessimism and bears came out, and then it was very hard for some of the bears to believe that actually the market had turned and just kept on moving higher. Now we are reaching these really elevated levels, so we are going to see a lot of talk about some sort of correction or sector coming, which may or may not happen. But the reality is that the market is moving towards our targets. It's completing some of these patterns, and then we'll be watching for further price action clues to assess what the market is likely to do next. But if S&P 500 were to do a catch-up, and now this is not the futures chart, it's the S&P 500 cash chart, we have this point D a little bit higher. Now let's actually do a quick one for the Dow Jones E-mini futures. And here, E-mini futures, in my opinion, I think what is likely to happen is this market has held this support level around here. Maybe it wants to also go a little bit higher and complete this 1.618 expansion of this BC swing. And if we were to take an ABCD higher, we get a really high level of about 48,000 roughly. So I think there are a number of levels that the market needs to go through before it's able to get there. But 42,000 is the kind of level the market could actually achieve. I have not drawn this smaller ABCD, which could actually take us to around 44,000 level as well. Now it all depends. All things could change pretty quickly. If the market begins to actually take these lows out, then it could also be a rounding top formation. The market could actually pull back right towards the bottom of this channel. Thus far, it's actually been tested. It has tested this channel top, pulled back a little bit. Now it's forming kind of a double top formation, which is not confirmed. This is because the swing is not taken out. So a lot of things happening for this market. It's a little bit different to the NASDAQ S&P 500 because Dow is actually a price weighted index, not a market cap weighted index. One thing. The second thing is got a different kind of stock, so there has been some sort of rotation, and the kind of levels NASDAQ is at, maybe some of that money comes out of some of these really hyped up artificial intelligence related stocks, and they begin to move in more like Dow like stock, which could actually propel it, and that could be one reason why the Dow has lagged a little bit. So we'll have to wait and see, but we'll be really carefully watching the price action as we approach these levels, and we have actually achieved these key levels in some of the markets. Here the Russell 2000 is just stuck in a range. It has been in a range a long time, really interest rate sensitive stocks. The chances are that if it remains supported by this 38.2% retracement, it could also do an ABCD, go right at the top of the range, 78.6% retracement, ABCD 1.618 between 2280 and 2320 kind of a level is maybe perhaps the market may want to try to attempt. I do apologize, the video is getting really long. I will not be able to do the analysis for the sectors, but I think I'll do a separate video about it Monday or Tuesday. A separate video will come for the tech stocks next week as well. I wish you a great weekend and a prosperous trading week ahead. And if you enjoy our video, if you found it to be of educational value, give it a thumbs up. Do think about subscribing to this channel, and if you do, please do hit that bell icon button. That way you will know when the new videos are posted. Good luck, good trading, and speak to you guys soon.